Hey everybody, it's Shannon from Alphatrends.net. Today's Friday, the 8th of September, 2023. The market this week lost a little bit of ground. It wasn't really that bad. Semiconductors, though, lost 3.7%, and the weakest group continues to be weak. Big surprise, right? The trend is your friend. And let's take a look at the charts to make some sense of it. Here's the S&P 500. On the left is the daily time frame. This red moving average is the 20-day, and that blue is the 50-day. So you can see the 50-day moving average is rising. That's because we're getting rid of this data. We got rid of this data here today in the 50-day moving average calculation. And it will continue to rise as long as we're in this area next week. So we're kind of at a crossroads. We're on the left, on the daily time frame, you can see we're at the anchored volume weighted average price from the low in August, from that bigger pullback. We rallied up nicely, and now we've pulled back here again to the 20-day moving average and that anchored volume weighted average price right in this general area. So that's what we're looking at here on the right on the 30-minute time frame. The most important thing on this 30-minute time frame is the direction of the 5-day moving average. And when we look at it, what you'll see is, let's just add a let's see, I guess I have to draw it in manually, but this is, these would represent the days. So on Monday, we're going to get rid of this day, and assumingly we replace it with data somewhere in here, that means that 5-day moving average will continue to decline. And when we have a declining 5-day moving average, I look at the market on the intermediate term as guilty until proven innocent. It's trying to prove that this will be an important support level that will hold. If, however, we see the market rallies up to there, comes back down and does something like this, then we could be headed for a deeper correction. If we break below this week's low and hold below it for more than a half hour or so, then we'd have to look, I think, again at the anchored volume weighted average price from this low, and that would be obviously, something worth paying attention to on the downside. The other scenario is we can just start to turn sideways in here, and that's the preferred scenario, is that we would turn sideways in this market a little bit and start to build for the next potential move higher. So let's kind of sketch what that might look at like. So that would be Monday, this would be Tuesday, Wednesday, Thursday, etc. So let's say it rallies up to that 5-day moving average. The next day, maybe we get a slight flush below that level. It rallies back up to the 5-day moving average again, and at that point, the 5-day moving average will be flat. Okay, so this is the potential bullish scenario. Once we see that happen, I want to buy the higher high above that flat to rising 5-day moving average, and then set my stop under the most recent relevant higher low. These are the concepts in my book, in particular the new one, maximum trading gains with anchored VWAP. So I would want to set my stop, if I'm a buyer here, I would want to set my stop either under this low or this low. Myself personally, I would do it here. Maybe I would do a half here and half under there, but it's just to show you a possible scenario of how it might turn bullish again. If it were to do that, then I would continue to raise my stop under the higher lows. Now, that's just a potential scenario. It's not something I'm expecting to happen, but we got what we wanted from the market this week, which was to pull back a little bit deeper, so that's a good thing. The NASDAQ also pulling back. It got a little bit extended. It's holding the rising 50-day moving average right in here, that blue line. It's also holding the anchored volume weighted average price off of the all-time high. So this market may be in a little bit better shape than the S&P 500 overall. Here's what looks like currently a little bit of resistance. It doesn't mean I would buy above there, especially if it was to rally quickly above there. And then I would want to see, okay, well, can it maybe hold the 5-day moving average if it does this? If it were to do that, and then maybe, on Tuesday, a gap lower and quick recovery, that would be great to set the NASDAQ up for further continuation higher. Otherwise, we see a failed rally at the 5-day moving average come down in towards this level, and then we would want to see if this anchored volume weighted average price from the low last month will continue to hold, or if it would lead to something greater. The primary trend is higher, so I'm thinking we have a better shot of upside continuation, but I'm not married to that idea. I'm going to wait for actual price confirmation of that scenario or something similar before I was to get involved. Now, the Russell 2000, here's our daily chart on the left, and what you see here is what I kind of sketched out to subscribers the other day, saying, it's possible this is a head and shoulders pattern. It's dancing on this 200-day moving average, and the black is the 200-day moving average, and the dark blue is the year-to-date anchored volume weighted average price. So it's kind of been dancing on that here for, what's looking like the neckline of this head and shoulders pattern. So, let's back it up for a moment, though, to frame it within the weekly time frame, because on the weekly time frame, that's what we see. But on the weekly time frame, realistically, we look at this and we say we're either in a longer triangle or a sideways consolidation, rather. Thank you. Anyway, so here, this is the potential bearish scenario. If instead it holds in here, it just seems unlikely, though, because we've got a declining 20 and 50-day moving average, and the trend so far, each rally has failed, and we have this lower high here, which forms, of course, that right triangle, right shoulder, rather. Sorry. Anyways, it does on the right show that we had a nice rally develop. We saw that pattern of these higher highs and higher lows get interrupted right here on this day. So if you were long in this area, you should have sold right somewhere in here. Now we're below declining 5-day moving average. I'm not shorting it. I haven't shorted it. Maybe I should have. I don't know. I'd rather see it do this, though, and then kind of maybe look for another lower high and then look for the short sale. It seems unlikely, but it's possible. It could just stay in here in this area and then maybe build for another push higher. We'd want to put an anchored volume weighted average price off of this peak right here. That's that purple line. So just like the 5-day moving average flattening out, we'd want to see the market get back above that. So maybe it does something along the lines of this, and then it's a trade. But again, with a declining 20 and 50-day moving average will be declining as well. It just doesn't look likely to me, so I'm not going to spend too much time thinking about it. Semiconductors, this is another head and shoulders pattern I had pointed out to subscribers, saying this is basically your neckline right in here at about 143. Over here on the left is a left shoulder, this is a right shoulder, and this is a double-headed head and shoulders pattern. If you look it up, you'll see that that is such a formation. Anyways, I wouldn't want to short it if it breaks down, like this, let's say next week. In fact, I think that if it were to break down next week, it would have had to run too far. This would be a sucker short. It then bounces up and then makes a lower high. Then, that is another lower high over here. At that point, I would want to short over here for a move down maybe to the year-to-date anchored VWAP. But right now, I just don't see anything to be positive on the shorter-term time frame, on that 30-minute time frame on the right. Again, we're below the declining 5-day moving average. We're below the anchored volume-weighted average price from the low last month, and we seem to be stuck below that. So a lot of caution regarding the semiconductors and then the biotechs. They rallied right up to the 50-day moving average. They broke past this little resistance. I didn't trade it, and it broke down and is doing what it's kind of supposed to, is that, this prior band of support in here held as resistance. It rallied up and, right to the 50-day moving average and that level. Let's take a look at the anchored VWAP off of this peak. I should have that on here in this one as well. So you can see it came close to that anchor from that peak. And now we're lower highs and lower lows below the declining 5-day moving average and below this prior low right in here. So I'm going to say avoid these or look to be a short seller at opportunistic times. The financials are kind of stuck here. They're holding the anchored VWAP from this low right in here. That's the purple on this one. After hitting the anchored VWAP from the high over here on the daily time frame, from mid-July, we kind of got through it quickly, held his resistance, then held his resistance on this most recent rally. Now, this little level that had been prior level of importance as far as support over here, broken, turned support, and now back to resistance. This is kind of a near-term level of interest that I wouldn't consider getting involved in these until it's at least back above, let's say, 34.50 and held that. A scenario like that might look something like this, and then to be a buyer. But otherwise, it's just kind of neutral right here. It's got the risk that if it breaks below this, 34.10-ish level, that it can come down to the year-to-date anchored volume-weighted average price again. So next week seems like it's going to be pretty important for most of these. The energy names continue to move higher, and oil, if we take a look here at the daily chart of oil, we see the anchored volume weighted average price off of that peak that it made in 2022. we jumped above it and we're holding above it pretty impressively. So buyers are in control there, and that's why it's not a surprise to see the energy stocks continuing to move higher. Let's look at the weekly time frame. So we consolidated and broke back above that level. Now we just consolidated and broke above this level. Here's our next area of interest. So, if you're long, just be aware this is a potential level of supply, or maybe it's going to run up through that high over there. If so, I would be very tight on my stop up in here. Let's take a look real quick at Bitcoin because it continues to really give no reason to be involved. Here's a daily chart. This is the low from the 2022 low anchored volume weighted average price. And it seems to me like we're still going to head down and test that 25,000 level. This is the anchor off of the year-to-date high, and that continues to decline. When we look at a shorter term time frame, this was the news a week and a half ago, whatever it was, that GBTC might have a better chance of getting their trust approved as an ETF. It rallied up quickly on that and then failed miserably, as we previously noted. Notice how the anchored volume weighted average price from the beginning of that move continues to show an area of supply. That's because the average participant, that's their price in here. So when it gets up to there, most of them are losing money, so they're looking to break even. Anyways, that'll do it for me. Have a good weekend, and talk to you next week.